video, I'm going to explain to you how and why CPI should be of an interest to you and how it actually affects you either as an investment trader, as a crypto trader, or as a forex trader. What is CPI? CPI stands for the Consumer Price Index, which is an economic indicator that tracks the average change in price of a certain good and service. CPI in its actual sense is a measure of inflation that shows how much change in price of particular goods and services. Now, the thing is, policymakers, investors, business owners, and plenty other people that attribute and contribute to the economic factor of different countries actually track this index to know where and how to invest their money over a particular period of time in a country or, let me say, in an environment. By keeping an eye on the CPI, business owners as well as investors can have a better understanding concerning a particular environment and make informed decisions concerning their investment either in a country, in a sector, or in a particular nation. CPI impacts everything from the cost of living to policy making decisions, affecting everybody from the final consumers to as well the policy makers. Now, have you ever wondered why the central bank of your nation, of your country, of mine, just come up with different decisions and policy concerning certain matter or just over a particular period of time? Yeah, that is actually based on the CPI. And now in this video, I'm going to explain to you how and why CPI should be of an interest to you and how it actually affects you either as an investment trader, as a crypto trader, or as a forex trader. The CPI tracks the level of change in the average price of a basket of goods and services. And it is actually one of the most indicators used to track the level of inflation. How does the CPI works? In different countries, or let me say in different climes, I personally don't know, but I understand that the CPI is calculated by the National Statistics Agencies. The number one process is the selection of goods and services. So a basket of goods and services, let's just say like a quantitative measure of goods and services, like a tuber of yam, a basket of tomato, just let's put it that way, is being selected. And this can be from a particular, or let me say any particular item that are purchased by almost every household in a particular country. For an example, your medical care, your health care, your food, your electricity, your entertainment, any basic thing that is purchased by almost every household in a particular country. And this is used to track the level of the purchasing power of every citizen in a country. So you see, this is very important to note and to track because it affects the level of the country's economic status, and this is something important for you to note as a trader. Secondly, the price of these items are collected periodically from different sources, like from the online source, from retailers, from wholesalers, from just across different levels. And these prices are being stored, are being tracked, and are being used for statistical data to predict the consumer price index of a particular country. Third is the weighing process. Each item in the basket is assigned a weight based on its importance on the average consumer's budget. So for an example, if every average consumer in the country spends a lot on entertainment than food, definitely entertainment is going to be very more important than food in the consumer price index, and it's going to be used as a greater yardstick to measure the consuming power, let's say the price or purchasing power of a citizen in that country. Afterwards, the price of these items are compared to a base period. Then the index is calculated. So this is the way it works. The index is calculated, and let's say pegged to a base period of 100. So subsequently, the percentage price change of this index are calculated to a base period of 100. For an example, so let's say they are picking it from January the year 2024. So by February year 2024, if the percentage change in price of a particular commodity that is very important to almost every household in a particular country is 5%, then we say the consumer price index increased by 5%. I hope you understand the analysis. So now that you've understood the basic principle of consumer index, can we get to talk about the uses of the consumer index and how it affects everybody in the digital space as a trader, or let's say an investor? Number one, the CPI is used as a measure tool to indicate or calculate the level of inflation in a particular country over a particular space of time. And in turn, business owners, policymakers, investors use this information to make informed decisions concerning their action in a particular country or a particular economy. The second use of the CPI, the Consumer Price Index, is the cost of living adjustment. This is used to ensure or to keep pace with the level of inflation in a particular country, to ensure that the purchasing power of almost every citizen in a particular country is in tandem or balance to the level of the rise in price and commodity of the country. Have you ever wondered on what basis the federal government of your country or my country gets to agree with the labor congress or the labor union on what should be the minimum wage in a particular country? Apparently, they do this based on nothing else than the CPI. Number three is the economic analysis. Economists and policymakers use CPI to determine their monetary policy over or for a particular country. So, for an example, the central bank of a country uses CPI to track or decide the level or the interest rate of investment in a particular country. Now, you might be wondering that this is our jargon, but stay with me. I'm going to expose you to how all of these decisions affect you as a trader in the crypto space. Number four, indexing financial instruments. There are some financial instruments that are actually indexed to the CPI. For an example, the TIPS, the Treasury Index Protected Security, are actually pegged to the CPI to help investors keep check or to balance their purchasing power during the times of inflation. So, how does the CPI affect the economy? The CPI affects the economy in just four ways. Number one, the consumer spending abilities. You will agree with me that based on the previous analysis we made, the CPI is a definite tool that affects your purchasing power as a consumer or as a final consumer in a country. The second way the CPI affects the economy of a particular country is in terms of government policies. Now, the job of the government is to ensure that the purchasing power, or let me say to create economic stability in the country, is to ensure that the purchasing power of almost every household in the country is stable and kept in check. The way the CPI affects the economy of the country is in terms of wages and salary. So basically, when there's inflation in a country and the purchasing power of almost every household in the country is limited or is affected, the government has to come in place with the policymakers, e.g. as the central bank, to make basic calculations and sit with the labor unions, or let's say the trade union organizations or congresses, to decide that, all right, this is going to be the minimum pay for every worker in the country to ensure that people can have the purchasing power to get the return of their job. Fourth and the most important effect of CPI in the economy, which is what we're going to be looking at mainly in this particular video, is the economic impact of CPI in a particular country. Now, central banks, like in terms of the Federal Reserve, tracks the CPI, which is the Consumer Price Index, to set the interest rate of a particular country. So, for an example, in the times of high inflation in the country, the central bank had, taxed the responsibility of increasing the interest rates of the country to attract more investors. And in the place of lower inflation, the central banks attach the ability, or let me say the responsibility, of reducing the interest rates of the country to stabilize the rate of attraction of investors into a particular country. And now, you might be wondering, how does all of this affect you? So, for an example, you see that when the US, for an example, is to release their CPI news on a particular week, it affects the forex market. In what way? Because if the interest rate of a particular country is to be increased or be reduced, that means it's telling a particular thing about the economy of the country, and as well going to affect the currency of the country. So, for an example, if you are trading, let's say, the Japanese yen against the USD on that particular day, and the CPI indicates that the currency is actually going lower, let's say the economic strength of the country is actually on the downside, you should know it to affect that currency which you are trading. So, if you are trading the Japanese yen against the US dollar for that particular period of time that the news is being released, you should know you'll be in profit. And if you are trading the US dollar against the Japanese yen by that period, you should know you'll be what? You'll be in loss. It's just as basic as that. But it doesn't come to an end at that point. Let's talk about how much it affects even in the crypto space. CPI is definitely related to inflation. We should know it affects all levels of financial markets, including cryptocurrency. Because cryptocurrency is a very dynamic financial market on its own, it affects the cryptocurrency market in different ways. Number one is the inflation hedge. As you know, from data over years, let's say 10, 20 years, or let's say just decades over, CPI has always been on the high rise or has been increasing over the particular period of time. So therefore, investors during this period have always been looking for more ways to secure their purchasing power over this period of time. So definitely they try to look for more secure ways of investing their money. which even regardless of the volatility, or let's say the volatile nature of the cryptocurrency, investors try to invest more in cryptocurrency when the CPI is high. So, for an example, if the CPI news is released for this week and it is on the high side, you should know that will be more on, or let's say more chances for investors to pull in their funds into cryptocurrency to be able to secure their funds, because everybody wants their funds secure, everybody wants their investments secure and not affected by inflation, or let's say the economic factors of a country. For an example, if I was a business owner and my business is in the US and the inflation in the US is actually on the right side, high side, it is definitely going to affect the currency of the US, and the currency of the US is going to do what? Go low. So if my investments, or my let's say my worth or my assets are kept in the value of the US dollar, by the time where which the US dollar actually goes low due to the level of the CPI or the rise in the CPI, definitely my wealth is going to go low. So by that period of time, I'm going to try to search for somewhere safer where I can keep my money. And what is that? The Bitcoin. What is that? That is the crypto space. So definitely during the time of inflation, if investors run from just basic investments and run into the crypto space, it is as basic as that. Number two is the monetary policy and market sentiment. As we've learned over the period of time, that the CPI affects mainly the central bank's decision for a particular country, because the basic responsibility of the central bank is to keep the consumer purchasing power in check and in balance. So if the CPI data actually reflects inflation, the central banks are left with no choice than to increase their interest rates of investment in a particular country to attract more investors. In other words, to attract more funds into their economy to balance the inflation. So you should also know that by the time the investors are being attracted and they have overflow of investors, and the inflation rate is being reduced, they have to do what? Reduce the interest rates out there, which is going to do what? Affect the level of investors and also the economy. So as a trader, you should be able to understand and to discern the level at which the inflation of a country is going, and also know how to use that to your own advantage, because basically we have no job as a trader than to take use of information, make use of information, and manipulate it to our own advantage. The adoption and usage of cryptocurrency is highly affected by the Consumer Price Index, and this is not a fact to be argued. This is just a basic fact that actually influenced the crypto space. Because if you are also an investor and you have your investments in the US dollar, you want to play it out when the inflation is high to protect something more stable. So basically, the CPI is something you should always look at for on a weekly basis to determine the prospective move of the cryptocurrency space. And also, in the place of usage and adoption of the cryptocurrency, the more inflation goes in the country, the higher the level of adoption and usage of cryptocurrency for that particular period of time. So basically, you shouldn't joke with the CPI news. And lastly, as I'm going to say to you, the more people go into adopting the cryptocurrency during this period of time, the increase in the price, because that will be the increase in demand of the cryptocurrency. And the lower they do that, the lower the demand of the cryptocurrency, which is going to affect you or your position as a crypto trader. So what do you feel about this video? If you think that the CPI is something worthy for you to take note and to always use as a trader, as a particular tool for you to use as a trader, you can just comment in the section and let us know what you feel about that. So till when next I come your way, stay cool and play